And that means we are joined by Steve Rhodes. Steve Rhodes is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge on at 11 a.m. Eastern Time, right here on TFNN. Check it out, okay? This is what I say about Mastering Probabilities. If you want to get just the most amount of data you can, and it's condensed in a consumable way, in a digestible way, this is what I read every morning, right? And it gives me kind of a beat of what's going on in the market, what might have been happening overnight. And it's really just a nice way to get your bearings for the day. Go ahead and check it out. Again, if you are a first-time subscriber, you can do this risk-free. If for whatever reason it doesn't work out for you, we do offer a 30-day money-back guarantee on all of our newsletters. I'm going to bet that is going to work out for you. Steve, how are you doing?
I'm doing great, Jacob. Thanks for being so kind. Your kind words.
Oh, absolutely. I mean it too. This is a fantastic newsletter. I really enjoy it. So.
That's great. You know, I always enjoy doing these segments, and I'll usually spend about an hour and a half or so just kind of preparing my thoughts to try to figure out in maybe about 14, 15 minutes or so, you know, what can I convey in a logical manner. You know, and that makes it worthwhile for somebody to listen in. But every now and then, I have an expression that everything in life is happening for us, not to us. Sometimes, I may have put together a presentation and then the market changes in the last half hour. And I say, you know what, we're going to do something different. Scrap that 90 minutes worth of work and let's take a look at what's going on now, because that's what's important, to our listeners here. And so this first screen that I have up here, this is something new that I had developed right around election time. Okay. And I'd never taken a look at the market this way. And what I'm referring to, and I'm just going to simply open up the Dow chart first here. And what I mean, what I did was I went back and took a look at every, I provide, as you know, seasonal cycle charts out there. Yes. We can take a look at a presidential seasonal cycle, all kinds of seasonal patterns that are out there. So what I did, back around the election time was I started taking a look at a daily chart, which is what I've got up on my screen right now. I know I've got a lot of data here, so things are acting a little bit slow, so I'm trying to just squeeze this a bit. But what we should see here momentarily, there we go, is we should see this line here says Biden's first term. This shows you what the S&P, or this is the Dow, this shows you how the Dow traded the day after the election. Yes. All right. Yeah. And as I kept going back further out there, so I said, okay, that's interesting that, for that 4-year period of time, market performed pretty well. You can't really argue with statistics with regard to data. I wonder what happened during Trump's first term. What happened the term before that? And then what really opened my eyes, what I thought was, is this just a coincidence or what have you? Trump's first term, 17,994.64 was the day after the election. That was the open inside of the S&P 500. And then we get that COVID crash. Yes. And when I saw this COVID crash, it pulled right back and basically stopped right at that first term, like it was a support level, a support or resistance level. If you take a look at the second term for Obama, it opened up in that next election day. Price started moving lower, but once price got back above that support/resistance line, markets continue to move. So I went back further and further to take a look at that. But what I want to do right now is just give folks the level to be watching for the Dow. I'm just trying, my charts are, I get so many things going. 42,850.40. That's kind of what I call right now the Trump breakout level. Yes. And price is still, we're trading just above that inside the Dow. If we look at the S&P 500, that'd be the second center chart here on the top. It's at 58.64. We're trading just below that right now. We're trading just below the NDX 100. If we look at these instruments, these 9 instruments, there's one instrument that has performed the best since the Trump election. And that has been natural gas. That is the lower left-hand chart out here. We can see that with the exception of maybe, I don't even think it was one day, natural gas is traded above the price point after the date of the election. So that might be something that folks want to take a look at, maybe investigate a little bit further out there. So I've got gold. We can see right now gold is trading above that level. In fact, this is kind of interesting, right? If you take a look at the gold chart here, just to show you really how this works, how it's not really just a random data point, is gold. The first day after the morning of the after the election, Gold was opened up at 2758.80 and just continued to move lower. And then we rallied right back into, look at this time period here in the early part of this, middle part of December. Gold rallied and found resistance right at that level. Right, it's got to be an important level, or in my opinion, when I watch price behavior like this is an important level to know and understand. And so again, 2758 is the number out there. Natural gas has performed the best. Before I would move off of this chart, is there anything that you're looking at or anything that you've got questions about?
You know, one of the things I did want to ask you, you know, you've had it the past 2 weeks, right? And sometimes throughout the week as well, but mainly on like your Sundays and Monday mornings.
Yes.
Where you're getting the futures, right? I mean, really rallying up, and then we sell off. And I remember maybe, I don't know, in December or something like that, we were seeing the same kind of thing. And you were looking at, you know, buys really in the SPX in different currencies, right? We were kind of seeing that the other countries were buying the market. It seemed like America was selling into them. I don't know if you're seeing anything similar with that now, or if this is kind of just, you know, a big fake out that's going on.
So it's a great question, and I haven't updated because I have to do that work manually.
I see. Okay.
I haven't updated it, but I want to share with you and really the listeners out there because they can answer this question for themselves. There's an easy way to do it, and everybody has access to the data, and you can do it. I'd say if you focus on either the Dow or the S&P or both, and which I really mean is the diamonds or the SPYs, because what you do is you're taking a look at overnight action. So you're measuring in essence, today's close to tomorrow's open inside the stock market. And you're doing just the opposite. So that's telling you what's going on internationally.
Yes.
We take a look at from the market open to the market close. That tells us what's going on inside the U.S.
Right.
And so you are exactly right. There was a period of time that I hadn't seen for decades. I was never even really able to find another period of time where it was just so clear the advances that were being made overnight, and it was international capital that was flowing here.
That's right.
And then whoever was selling in the U.S. was taking advantage of that.
Right.
So if somebody just looks at the SPY, they can go back, they can do that data, in a spreadsheet. They'll be able to answer that question. And it is an important question to try to understand out there, as well as other things that we look at. So great question. I don't have the answer for you, but I'll have it next week. How about that?
Fantastic. Yeah, would love that.
There's another data point that's really also important here. And I'm going to pull this up. This is the S&P 500. Whoops, it was the S&P 500. I'm still going to pull that up. Where the Sam heck did I put that? Here we go. S&P 500. Now this is a really cool and really important pattern out here. If you take a look at right now, if you're just looking at the upper right hand portion of the screen, what you see out here is I've identified the January high and the January low, and I recommend that everybody else do that. If you'd ask me what kind of market are we trading in right now, in fact, anybody can look at that and they already know the answer. We're consolidating between the January low and the January high.
Yeah.
Is that important? Yeah, it is pretty important, especially when we take a look at prior price behavior. Let's take a look at 2024 as an example. 2024, here's a January low. Price never came back and even tested it or what have you. The January high, we rallied up into the time of about the April timeframe, April-May timeframe. We pulled back and we tested that January high, rejected it, and continued to move higher out there.
Yeah, Steve, please stay right there. Folks, we'll be right back with Steve Rhodes right after the break. Welcome back, everybody. This is Jacob Shoup. I am joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge on at 11 a.m. Eastern Time every day. The market is open right here on TFNN. Steve, before we went to the break, we were looking at, basically the SPX consolidating between its January low and January high. You had a 5.
Exactly.
Yeah.
And it's an important data point. This is easy for now. You can use the SPY for whatever reason you don't get access to the S&P 500 out here. But if you go back and you start looking, you're going to understand just how important it is, especially once we break above or below one of these two levels out there. So at this point in time, right now, it's nothing more than a consolidation in between. we're taking a look at 2024. If we come back and we take a look at 2022 as an example, 2022, here's the January high, which never got touched, okay? But once we started trading below the January low, we continued to move lower out here. I'm not trying to differentiate between like a major bear market or something, but trying to help people to be able to interpret the message of the markets.
Yes.
And turns out that this January, this is not what's referred to trading-wise as the January effect out here, but it's really important to watch. If you look at 2021, you can see the January the low held was never tested. Once we got over the high, we consolidated for a bit. But once we back here, it was in about March of 2021. Once we just continued to test that support level, it acted as support. Boom, we just simply took off from there. So another thing for folks to take a look at. One of the other things I was going to discuss was apogee and perigee, the perigee pivot point. Perigee, so apogee and perigee deal with the distance of the moon to the Earth during the current lunar cycle. Mm-hmm. So during this current lunar cycle, perigee came in on Saturday, and what I do is whenever perigee comes in to the exact minute of time for futures contracts, I will identify exactly where that is trading. And for reasons unbeknownst to me, oftentimes they'll act as support or resistance. What they will also do is they'll certainly give you a short-term direction, whether it's short-term long or short-term short, so to speak. And now, in this case here, perigee came in on Saturday afternoon. I think it was Sunday afternoon, before the market, maybe it was Sunday afternoon, before the market had opened. So in that case, what I do is I look at the close of Friday and the open of Sunday night, unless they're really close to each other. For example, in silver, they were pretty much right next to each other, right around the 31.71 area. Gold is either 28.72 or 28.67. Those are levels that people who trade gold or silver or trade in the metals, probably something that they just simply want to know. If price starts to break through those areas out there, what you can expect or anticipate is a further move lower. Just as something I had taken a look at during the break, I was curious what the spot VIX index was doing. And the spot VIX index, or if you take a look at my, it's really the second line from the top, you see VIX, spot VIX, and you'll see what's referred to as a rate of change. Daily rate of change. Right now it's at 20%. I don't know where it's going to be at 4 p.m. But if it's anywhere above plus 10% out there, what that does is that triggers a potential bounce or bottom in the overnight or early morning session out there. So you've got, when I say overnight, it could be when Asia opens up, early morning, it could be when Europe is opening up. So 8, 9, 3:30s, in those time frames out there. Sometimes it might not be till even later in the morning. And what we're looking for here, I'm going to go ahead and change screens. I'm going to change to a white background screen. Okay. Because I'm anticipating that we'll have a more than a 10% rate of change at day's end. Okay. And so one of the tools or techniques that I teach folks is referred to as the Rhodes Momentum Indicator signal. Now I'm going to just simply open up the 30-minute chart here for the ESPN. I'm going to show you examples of those signals that have identified bottoms out here. So as an example, when these black diagonal lines are triggered, whether it's to the upside or to the downside, they're telling you that the market is stretched. And what we're waiting for is we're waiting for the cavalry. In the case of the cavalry, if we're looking for a bottom out here. And the way that the cavalry shows itself, it identifies itself by creating a bullish reversal candle. And that's what confirms that pattern out there. The last time, or what we're looking at on my screen right now, that was at 12 o'clock in the afternoon on December 25th. This is the type of pattern that you would be looking for in the overnight hours to be able to take a long, even if you're short, to consider trading around that and taking a long trade. Here's another Rhodes Momentum Indicator bottom pattern out here. Nice bullish hammer candle that took place at 10 o'clock in the morning on the 28th. And then we got one heck of a nice rally up until we generate a Rhodes Momentum Indicator top out here. So right now, you can see we're in bar number 7 on the 30-minute time frame chart. That means bar number 8 is being worked on. And if we tick below the low of this last bar out here, let me pull this off the side just a tad, just to give you that price point. That low is 58.31. So we haven't ticked below it just yet, but if we do tick below that on in the next bar 8, so bar 8 is going to complete at 4. By 5 o'clock, we would have potentially a TD9 count bottom, as long as we make a lower low between now and then out there. That would be one of the signals. So you'd be looking for that. But this Rhodes Momentum Indicator signal, you and I have talked about this, Jacob, where I kind of use the analogy of it's like that bouncing ball that you you're in a pool and you push down and then it eventually, just simply explodes up. And that's typically what happens with that pattern. That would be the ideal pattern. But you're still just looking for a bottom signal out there. And you can see here as we look at it, it's typically you get those best signals on a 30-minute time frame. As you know, I use multiple time frames. I use, for the equity futures, I'm using 15, 30. I'm using 10, 15, 30, 60, 120. 240, 300 minutes, and then the daily time frame out here. So you're looking at the 30-minute chart. You can see up in the upper right-hand corner, you got the NQ also down. Now that has formed. That is bar number 8 right now, because that has made just a slightly lower low. So is the ES Mini. So watch for that pattern. That's a pattern right now as we come into the close that could be signaling an anticipation of some type of overnight rally. Now the rally ought to take us up to the oscillator and change line. In the case of the ES Mini, that's around 59.06 or so. It's 26.69 inside of the NQ out there. If I see these patterns form overnight, or not overnight, well, and I happen to be up maybe later on after when the markets open back up at 6 o'clock, I'll post something inside of the Tigers in if I see it. But so that's what I see that's going on. I would anticipate at this stage here, nothing's really broken. Not saying that it can't get broken, but nothing is really broken when I take a look at how the market is trading, and we're just simply trading with inside the January range out there. So this could change tomorrow morning, right? It could, things could just simply fall apart, and it could change tomorrow morning. But I need that market to prove it to us. And so 57, 73, 31 is the number for the S&P 500 to watch.
Yeah, and that's really like one of the best utilities of that graph you showed. I mean, we've been bouncing in that resistance line for a while. I know it seems like, Babylon might be burning, but I mean, we're pulling back to just January lows. We've been here recently. So, Steve, thank you so much for coming on. We'll see you tomorrow morning, 11 a.m. All right, Steve?
Sounds great. Thanks, Jacob. Have a great afternoon.
Take care, Steve.